The stock market is flashing warning signs. Stocks are falling. Oil is surging toward $100 a barrel, actually above that, and volatility has been spiking. Here to make sense of it all is Joe Tigay, portfolio manager, Rational Equity Armor Fund. Joe, great to have you on.
Yeah, it's good to be here. This is a very interesting time, particularly as a long stocks, long volatility manager. This is a really interesting time for me. Not wishing this environment, of course, to be out there, but of course, as a trader, it's something that I look forward to and having the opportunity to make some moves.
Yeah, and we'll talk about some of those moves that you're making. But first, just kind of set the stage for us. Is this a short-term geopolitical shock, do you think, or the start of something bigger for the market?
Boy, you have to be ready for both, of course. You have to be ready for it to be short term. You have to be ready for it to be something bigger. Falling asleep last night, you had oil at 120. That's the type of price for oil where if it stays there for a month or, maybe even just a few weeks, it could just cause this economy to tip over. And it just kind of is a rolling ball where it spirals out of control. These higher prices just make everything more expensive, which just slows down the economy, and it could lead us to a recession. So it's something we're acutely aware of. The longer prices stay here, the worse it's going to be. A month ago, we would have said $100 oil is going to be something that's going to tip this market over. We're right there right now. So that's the question, like, is it literally just for 1 second? Or is it going to be something that, potentially gets worse from here? Or can we turn this around and get oil back under $80 where the market can, and the economy more specifically can grind on?
Joe, you mentioned the 120 level. I think it was 119 overnight. That was very short-lived, but we do have oil at around 101 right now. Do you think that $100 oil is the thing that finally breaks this market? Talk to us about how disruptive it is for stocks and for the global economy.
Yeah, absolutely. It has the potential, like I mentioned, though, if it's just for a blip, it's just for a week or two, and we can get the Strait opened and we get oil retreating, it probably will not break the economy. Won't have any long-term damage. But if this is something that sustains for months on end, it is something that can have a disastrous effect on the economy. It is very inflationary, of course. It's going to make everything cost more. It's essentially like a tax hike without the benefit of the government getting any money. It just makes everything more expensive for everybody. So it's not something the economy will like for the long term. That said, off of the 119 level overnight down to 100, there are signs that things are improving potentially in the Strait. And there's also signs that the strategic reserves, the G7 stepped up and said we're going to release all of our strategic reserves collectively to have an impact. But that is something that's temporary. Again, this is going to bring these prices down for the short term. Really need a long-term solution. We know the market does not like uncertainty.
Yeah, certainly not. There's also a lot of talk about stagflation now, as we've seen some of the economic data point to signs of cooling or worse. And then obviously there's concern about the inflationary impact, especially from oil prices. How real of a risk is stagflation? And what do you think pricing that in would look like?
Ironically, I don't think stagflation is really on my radar. I do think if oil does break the economy, it will be something eventually to become deflationary. Things slow down, things get a little bit cheaper. So that is kind of ironic. It's inflationary right here. If it's something that stays here for a long period of time, it's something that will slow the economy down, and then ultimately prices will come in on the slower economic growth. I don't see like this oil shock as being stagflationary. I think the oil shock is something that short term raises all the prices, short term slows the economy down. Ultimately, that slow economy brings prices down. So it's not something that I would see together where we're seeing inflation plus a slow economy. It's I think we will see either growth with high inflation or a recession where inflation is coming in.
Okay, volatility has also been front and center. Of course, I'll be asking about how you're capitalizing on that. But first, with the VIX surging above 30, it's historically a panic level. It's back below that now. Just tell us, what is the VIX actually telling us at these levels?
Yeah, it's uncertainty. We don't know what tomorrow's move is going to be. It's specifically saying we're expecting big moves in the indices. 30 plus VIX is about a 2% move a day in the S&P 500. That's a lot for the S&P 500. It's not something I would think of as a great investment to be in something, hey, this could lose 2% every day, or this could be a 2% mover every day. I want to invest in something a little bit more stable. Usually when things are scary, when things are uncertain, you see this higher VIX. Now, paradoxically, though, the higher the VIX is, the better the investment of the market is. So if you look back in time when the VIX is above 30, it's actually a good time to buy the market. When you see blood on the streets, when you see people panicking, when people running for the exits, it's actually a good time to be buying the market. So that's the contrarian's view of volatility. That said, right now we're just in a period of unknown. There's a lot of potential possibilities. The possibility of this war lasting a long time or ending quickly, I think, are is the biggest unknown.
Okay, so VIX is at around 27, a little above that right now. Should investors be buying this dip that we're seeing today?
It's very, very interesting market. Of course, you have this dip today. We also have bonds down today. So it's really like, where do I turn to hedge? You maybe gold or the dollar might be a spot to look at money. But for me, as a long volatility investor, volatility is something that needs to be actively managed, very actively traded. You need to be looking at these spikes up in volatility as opportunities to trim your volatility position. Looking for the dips, of course, as an opportunity to buy it back. Last night, when I was talking about watching the market, it was an opportunity for me to say, hey, the VIX is 32. I had it on. I've had it on, of course, for this whole experience, but I've had it on from below the low teens or the mid teens, of course. And now I can take some off here up at 32. It's fantastic to do so. As it's pulling back today, it's an opportunity for me to say, hey, has my position changed much from last night? People were panic buying the VIX at 32. I was able to sell some to them. Now that it's a little bit lower, it's something, yes, I'm looking to buy it back. Having said that, initiating a new position here at 27, that's hard for me to recommend given the fact that this is very elevated levels for VIX.
Okay, I was taking a look. Two of your top stock picks are Alphabet and Palantir. Tell us why those two, and are you looking at those as short-term trades or something that you'd hold on more longer term?
Yeah, I would say these are longer term trades or core positions in the portfolio. Of course, two stocks that, yes, if the economy does slow down, if the war drags on longer than I'd like to see it drag on, they're going to fall under pressure like the rest of the market. Maybe even more so, but there's two stocks, of course, if we do get a quick resolution, they could bounce back. There's two stocks that are well off of their relative highs. Palantir a little over 200, Google 330, 340, down 10% from that recent high. So they are on a discount for me. So they are good stocks to be adding to here. And I just think for Palantir, it's looking at this new world of, we know about the AI trade. We know about the Palantir's AIP, but this new world of warfare, which we're entering into, I think Palantir, well, for better or for worse, is at the front line of that, and is proving to be effective and proving to be something that the government is not going to be living without anytime soon. And in fact, increasing their budget for them. I'd love to see Palantir expanding out into the corporate, into the private sector, but their government business is only going to grow.
Okay, so both notably tech stocks. Does that mean you think that the rotation out of tech that we've been seeing really all year so far will be short-lived and we'll see money start rotating back into tech?
I'm just a firm believer specifically in those two names. I do think we are still we're not at the end of the AI boom cycle. We are still in a expansionary period. Now, this is a period where there is lots of risks. There are companies taking big shots right now in the AI cycle. They're not necessarily going to pay off in the end of the day, but these are two companies which I feel like have a very solid moat. I do not think that they're going into massive debt to take these shots. So I do think that they're going to be around one way or another. I'm with these two names for the long haul.
Okay, can you give us an example of a name that you think is taking a big shot that might not pay off?
Oh, well, in the private space, there is, of course, OpenAI. They are spending a lot of money. They're not exactly making as much money as some of their peers, but they're spending a lot of money. They have a lot of deals. They're expanding, expecting to be one of the biggest companies in the world one day. And if they're right, they're doing exactly the right thing, and I wouldn't suggest them to do anything else. But having said that, they are biting off a lot. It just remains to be seen, will they be able to continue to chew that much?
If OpenAI was public right now, would you invest in it here?
It depends on the valuation, of course. I'd have to see if it's over $1 trillion. It'd be very hard for me to say that. I probably would not. I'd want to see a couple of quarters of what their financials look like, how their growth is going. So
Mhm.
I would probably sit out the IPO and kind of just watch it from the sideline.
Okay, and just to kind of wrap things up, I know a lot of it probably hinges on what oil is going to do, but overall geopolitical shocks tend to rattle the markets in the short term, but we see them often fade pretty quickly. Do you think this one will follow that pattern, or could this be different?
Oh, I'd love to see it fade pretty quickly. I'd love to see a V-shaped recovery in these stocks. I'm not banking on it completely, though. This absolutely could be different. This could be something which lasts for a while. This could be something, this oil shocks, yes, a lot of times they are very quickly recovered, but oil shocks that linger are potential reasons for recession. So it's something that I'm watching very closely, acutely aware that both are possible. I am, cognizant of previous oil shocks, which have led to recessions, of course. 1991, in the 70s. It's absolutely a possibility where this could lead to something that drives drives economic growth slower in a quick way.
Okay, so stagflation's not on your radar, but a recession is?
Yes, a recession absolutely could be something that could happen, and it's coming from higher oil prices. Higher oil prices uh, slows the economy down. A slower economy then, of course, ultimately drives prices down.
Okay, all right. I think this is a great segue into our rapid fire this or that round. Are you ready to play?
All right, let's do it.
All right, here we go. US Iran war, short term shock or long term problem?
It was a short-term shock.
Market right now, panic or opportunity?
Wow, it's interesting. Usually, I think of panic as an opportunity, so I'm going to just say it's an opportunity.
All right, both. Oil at 100, temporary spike or new normal?
Temporary spike. Fingers crossed, though.
Volatility, peak fear or just getting started?
We certainly can see higher VIX, so maybe this is just getting started.
So, volatility, threat or opportunity?
Well, I always view it as opportunity. It's very tradable back and forth, of course. So I'm going to say opportunity.
That was a softball. Safer haven, gold or oil?
Gold.
Energy stocks or tech stocks?
Tech stocks. I think energy had a great brief run, but it's very tied to the price of oil.
Big tech or the rest of the market?
I'm going to go with big tech. They're behind lately, but they have plenty of room to catch up.
AI companies or defense contractors?
Ooh, this is a tough one. A month ago, I would have said defense contractors, but where we are today, I'm going to go AI companies,
Large caps or small caps?
large caps.
Buy the pullback or wait for better prices?
If I have to, I would say buy the pullback.
Fed, cuts ahead or holding?
Fed cuts ahead.
So soft landing, still possible or off the table?
Absolutely still possible. The risks are greater today than they were 2 weeks ago.
6 months from now, higher market or lower market?
6 months now, of course, tied to the duration of the war. If the war is still going on, it will absolutely be lower. But if it is not higher, I'm fingers crossed that the war will be over.
Okay, and coming from a trader, your best investment strategy for right now?
Yeah, best investment strategy in a world where stocks today are lower, bonds today are lower, long stocks, long volatility, actively managed. That is my go-to strategy. It hasn't changed when vol is low, and it's not going to change, of course, when vol is high, and it's working very well.
All right, we'll leave it there. Joe Tigay, portfolio manager, Rational Equity Armor Fund. Always a pleasure. Thanks so much.
Thank you for having me.